Hi, this is Kelly Wright at the Money Show. With me is Mr. Mike Larson, Weiss Research, he said, Weiss Ratings, big expert on high yield investing. As you and I were talking off camera beforehand, the whole term of high yield,
it's kind of been, it used to be, right?
Yeah, kind of been a misnomer for a number of years. But all of a sudden, volatility is alive and well again, and lo and behold, we have a bond market.
We do. I mean, it's been an amazing period, multiple years where interest rates have been pegged to the floor. It's been, QE program after QE program here and abroad in Europe and Japan and so on. And so everybody's kind of grown accustomed to no volatility, very low yields. The Fed or some other central bank somewhere always got the bond markets back, and that is finally starting to change. Whether it's partially because of the tax cut program and the Trump approach to economics, whether it's partially because of the changeover in direction at the Fed, or some combination of all of that, you're finally seeing yields move consistently higher, and the Fed raising rates for the first time in several years, and other central banks following them.
So back in the day, I'm not going to date myself, but it was a long time ago. High yield was usually associated with lesser credits.
Yes.
Okay.
Yes.
I think that changed. Changed a lot, didn't it?
It did, because you had when you can't really earn anything on a U.S. Treasury. I mean, you have to search for yield somewhere, and that's not necessarily just in junk bonds, but we've seen it in corporates. We've seen it in dividend-paying stocks. I mean, I've been a big fan of dividend-paying stocks that have a better than S&P yield, but are not at that far end of junk credit where you're talking 10, 12% yields, which are kind of in the danger zone. I think it's more of a comfort area of 6, 7, 8% where you can find some companies that pay solid dividends, that dividend sustainability and dividend growth. So that's what we've been focusing on, and we've sprinkled in some other companies that have lower yields, but that have been able to benefit from growth in the economy. Your 3Ms of the world, your Watscos, your Alliance Bernstein. There's some names like that we really like.
You're starting to talk about high-end credit now. That's not something we always associate with the high yield market.
Yep.
There you have it, folks. That's the expert, Mr. Mike Larson. Thanks for joining us.